Hi crypto peeps, hope you're doing well. What an interesting week we've had. Another week of ups and downs and now some sideways action. As I'm looking today on 22nd of June 2022, it's looking like Bitcoin's around about 20,000 and change. So not too bad. So we'll see where it goes from this during this time of turmoil. So let's get straight to the news. There's some interesting stuff this week I wanted to share with you. And the first one here on Gear. DARPA drops a bomb on crypto's biggest selling point. Cryptocurrency evangelists promote the underlying blockchain technology as the stepping stone for a more equitable internet. Read Web3. This involves infrastructure, one built on promises like decentralization, immutability, transparency, and efficiency. But according to a study commissioned by the Defense Advanced Research Projects Agency, or DARPA, the blockchain technology might not be so decentralized and immutable after all. The in-depth study, which was conducted by 12 Bits, unravels how a very small number of participants can get excessive control over the entire ecosystem. Over the last half a decade, 60% of the net global Bitcoin traffic has been controlled by only free internet service providers, or ISPs. The report also picks up on 2020 metric, which claims that only 4.5% of Bitcoin owners control over 85% of the entire crypto pool. There's more details there, but I'll go ahead and read a bit more here. It's worth noting here that the report doesn't disclose any vulnerability in the cryptographically secure blockchain network. Instead, it highlights the weaknesses in the systems overseeing it. For example, interim changes made to blockchain software can modify transactions. Similarly, a networking entity that controls a big share of the particular blockchain can be coerced or driven by personal incentives to deny services for varied reasons. Wow, so that report's really interesting. That's online, like several sources the last few days. So I recommend you have a look at that. There's more details here down below if you want to look at that one. It goes on to say here, the study notes that the protocol traffic is unencrypted, opening the doors for many man-in-the-middle attacks. 12 Bits also crawled the Bitcoin network and found that 21% of the nodes controlling it run on an old version of Bitcoin Core client that is susceptible to attacks. Another systemic flaw highlighted in the report is that there is no penalty system in place if a node operator starts acting out of line. The Stratum protocol, which coordinates activities in the mining pool, is also said to be unencrypted. And since Tor alone accounts for 55% of Bitcoin traffic, that is exclusive to addressing it, a bad exit node can be used to influence traffic. They can rewrite history, they can censor transactions, and they can make it so you can't spend your Bitcoin. So yes, the DARPA report has come up with some very interesting reading for people interested in this fear space. So I recommend you read that. It's several sources online when you can have a look at that one. So moving on here to protocol. Binance US isn't worried about the crypto crash. They go on to say we're entering a crypto winter in a position of strength. And this comes from the Binance CEO, Brian Schroeder. Brian Schroeder has just been named Binance's US president last September when the crypto company offered to bump him up to a CEO. The sudden promotion marked a turbulent period for Binance US. Schroeder replaced Brian Brooks, who stepped down as CEO after just 3 months, citing differences over strategic direction. Schroeder took over from Catherine Coley, who was named CEO when Binance US launched in 2019 and abruptly left last year. Schroeder called the leadership changes a natural transition for a growing startup where something was created from scratch. He goes on to say, we're transitioning from a one-product company to a professional organization, launching multiple products and services on a very clear pathway to IPO. Binance US appears to be on a solid path under Schroeder, having just raised a $200 million seed round at a $4.5 billion valuation in April. Binance US is set to announce more funding in the next month or so as an extension to that round. Schroeder told Protocol, while other crypto companies are putting back on expansion plans, the company is gearing up for more growth. And there's some questions here if you want to read the questions as well. It's a very in-depth article there, especially if you're one of the people out there, and then there's many people out there that use Binance to buy, trade, and store some of their cryptos. So have a look at that one. As with all the news bites here, the links are down below for you to go there and read in full yourself. We don't have time to cover it all, so please do that. Be informed in the areas that you're looking at and buying and investing in. Now on the Bitcoiners here, this is an interesting one. Cardano dev team set to launch the first light wallet. I like the look of this. This sounds really great news. Cardano's development team, Input Output, has created a new light wallet which is called Lace. This new wallet comes with a host of features, and the wallet allows users to primarily manage, control, as well as store their cryptocurrencies in one place. The wallet will also let users keep their NFTs in the same place, which will help users manage all their digital assets in one wallet without relying on third-party solutions. The new wallet, Lace, was constructed with the help of a sidechain solution from Cardano's development team. The primary focus for the developers was to channel their efforts to introduce interoperability between Cardano and Ethereum networks. The wallet's features and characteristics include interoperability and the ability to use various blockchain systems, not only Cardano. As mentioned above, interoperability has been the chief focus of the developers, and the builders will soon start implementing other sidechains along with connecting with all other blockchains. The main goal is to make Lace turn into a one-stop shop wallet. The Light Wallet will be able to replace all other solutions and bring together all of Web3 in one particular place. And the target with Lace is to ensure that the Web3 space can be opened up to everyone easily. In other features, the landing page of Lace 1.0 mentioned that safety is one of their main priorities. They plan to achieve it with the help of an added security hardware wallet integration. Lace will also let users stake their ADA, along with which they will be able to start receiving their rewards. Overall, it's a platform that combines digital assets with an NFT gallery and a DApp connector that includes easy staking to make entry into Web3 seamless as well as enjoyable. This is interesting as well. Special attention has been given to the wallet's design. The Input-Output team has especially paid attention to designing the wallet. According to sources, Lace has been designed in a way that makes it easier for both a newcomer and an experienced user to understand the functionalities of the wallet. The wallet is easy to use, and it does not contain all the jargon from the crypto world, which is usually filled with tons of tutorials. This wallet will be facilitated by a free decentralized app store, which will contain facilities for both developers and usual users. Now, there's a bit more information there on if that one interests you. It interests me because I've said this many times again. I think we're too early in the crypto space right now. It's too complicated, it's too messy, and it takes too long for anyone who wants to buy, trade, store, or move cryptos in any way. What we need for people to have this as a proper tool of what we call mass adoption, especially globally, is we need a process which is pretty much like eBay and Amazon today, especially Amazon with their almost like their one-click process. We need that kind of amazing, super fast, super easy to use usability solutions for cryptos before it to be mainstream. And this looks like it might be a great step in that direction. So looking here on Vice next, and this is an interesting article. It says Tornado Cash is crypto hackers' favorite way to cash out, but experts say it can be traced. It goes on to say here that Tornado Cash has become the go-to service for hackers and crypto thieves, but its creators say it's merely a privacy tool that they can't control. In March of this year, suspected North Korean government hackers stole more than 600 million in Ether from hyped-up play-to-earn game Axie Infinity, in one of the largest crypto hacks in history. The hackers then sent a part of the proceedings, $100 million at the time, through Tornado Cash, a so-called mixing service designed to obscure the origin of funds. This was a very predictable move, as the Tornado Cash has become extremely popular amongst hackers and crypto thieves. Tornado Cash is a protocol that allows users to send in some cryptocurrency using their own wallets and get it back via different addresses. Its code is designed to mix a user's crypto with a pool of other Tornado Cash users' crypto in a smart contract, making it harder or if not impossible to track. The service official site claims that users have deposited more than 3.2 million ETH, roughly valued at $3.5 billion, in the service since it was launched in August 2019. Of that $3.5 billion, more than $1 billion, that is almost a third of all the funds that have gone through Tornado Cash, was laundered through the protocol, the vast majority from thefts and hacks. A spokesman for Chain Analysis, another blockchain tracking firm, said the company's estimates $1.2 billion of illicit funds have gone through Tornado Cash. They're the reason most scammers can scam without fear of retribution. There's more on this one if this one interests you here. I'll just read a little bit more here. The existence of Tornado Cash is simply a result of market dynamics, and mixing services have existed for as long as the blockchain. Transactions on a public blockchains are viewable by anyone by default, and several types of users, including the privacy-minded and criminals, want to hide their movements. There's more on this one. It's got a great article there, so please read this one. Keep up to date with what's going on then, Phil. And then I went on Forbes here. People are scared. Crypto brace for a fresh Fed earthquake after $2 trillion Bitcoin and Ethereum price crash. It goes on to say here, Bitcoin and Ethereum cryptocurrency prices have bounced back this week after a brutal crash that's wiped $2 trillion from the combined crypto market. The Bitcoin price fell under the key $20,000 per Bitcoin level over the weekend, before surging back. Ethereum, meanwhile, dropped under $1,000 per Ether for the first time since January 2021. Now, after the Federal Reserve stunned markets with its biggest interest rate hike since the 1990s, the billionaire chief executive of the crypto exchange FTX has blamed the Fed for the Bitcoin and crypto price crash and warned people are scared ahead of the Fed chair Jerome Powell's hotly anticipated testimony on Wednesday. They go on to say as well, literally markets are scared. Bankman-Fried, often known simply as SBF, told NPR this week, people with money are scared. It goes on to say here, Bitcoin and crypto prices have crashed along with stock markets in recent months, with the S&P 500 falling into a bear market last week, dragged lower by technology companies that had soared through the pandemic era. They go on to say here, the core driver of this has been the Fed, adding Powell is caught between a rock and a hard place as he battles to drive down soaring inflation that accelerated to 8.6% in May, an eye-watering 40-year high. On Wednesday, Powell will speak before the Senate Banking Committee for the first 2 days of semi-annual testimony on monetary policy, where he's expected to outline how far and how fast the Fed will go to combat inflation whilst trying not to trigger a recession. It goes on to say here, finally, the Fed's commitment to restoring price stability, which is necessary for sustaining a strong labour market, is unconditional. There's a bit more there, some more stats and everything on that one, so have a look at that one. Keep aware of this. It's a rocky time at the moment, as you probably already know. On Axios here, OpenSea competitor Magic Eden hits the unicorn status in 9 months. Magic Eden, an NFT marketplace company built on Solana, announced that it had reached $130 million in a Series B funding valuation, valuing $1.6 billion on Tuesday. Magic Eden is now a unicorn after being around for just 9 months. The company's shiny new unicorn valuation came together fast. It was founded 9 months ago and follows a $27 million Series A funding round in March. The recent market volatility gave even the venture capital industry a renewed interest in profitability, with Magic Eden appearing to fit that bill. The company is cash flow positive and very profitable down to the very last line, says the CEO. Magic Eden posted its best month ever in May in terms of transaction volume, with revenue of $7.5 million. It also managed to surpass its more established competitor, OpenSea, in a single day in May. That may be in part attributable to Magic Eden's relative youth, as well as its current Solana focus. Solana-based NFT transactions tend to have significantly less onerous transaction fees than Ethereum's OpenSea's home base. So have a look at that if that interests you. It's a new player in the field there. But yeah, they've managed the over £1 billion, unicorn status in less than 9 months. In fact, 1.6 billion. So that's a big move there. One to definitely keep an eye on. Investing.com here. This is some interesting news because I'm a holder of Cardano. I think it's got some legs. Disappointing Cardano devs delay the Vasil hard fork by a month. The blockchain engineering firm behind the Cardano network has released some disappointing news, announcing a 1-month delay to the long-awaited Vasil upgrade. The Vasil upgrade is set to provide a massive performance improvement to Cardano and its smart contract capabilities, according to the Cardano co-founder Charles Hoskinson. It was previously slated to go through on June 29th, however the latest estimate is now set for the last week of July. You can follow the link here and read more about that one on Cointelegraph, or it's in several other sources as well, so keep an eye on that. I expect the price to go a bit more volatile when it actually does go through, and hopefully there will be a bit of a run on it. But keep that in mind. Cardano is making some very interesting moves out there. Another one on Vice here. Bitcoin sellers lose a historic $7.3 billion in 3 days of pain. Everyone from short-term holders to mining companies has locked in huge losses as Bitcoin's price struggles to stay afloat. In just 3 days last week, Bitcoin investors saw the largest realized loss ever, losses locked in by trading as a Bitcoin sell-off saw investors bleed $7.3 billion. The last month has seen a sustained crash that pushed Bitcoin's price below $20,000 for the first time since 2020. Around 555,000 Bitcoins were traded between the prices of 18,000 and 23,000. Long-term holders liquidated about 178,000 Bitcoin prices below 23k, with the number of them realizing losses as high as 75%. Glassnode noted that there were other trends hurting not just the long-term holders, but also miners and short-term holders. Miner wallet balances seem to have stagnated, spending about 9,000 Bitcoins whilst holding on to another 50,000 and pulling back with 10% decrease in the hash rate. The Financial Times reported that shares in listed mining companies like Marathon Digital and Hut 8 have fallen around 40% over the last month, with some firms having to take machines offline as energy costs increase, Bitcoin's price drops, and funding is dried up from capital markets. A wave of acquisitions and takeovers are anticipated. So keep an eye on that one as well. They go on to say here, many investors are still holding on to their Bitcoin, however, with massive on-paper losses. If we assess the damage, we can see that almost all wallet cohorts from shrimp to whales now hold massive unrealized losses worse than March 2020. Lots of stats and lots more information on that one, so have a look at that one. On Bloomberg here, something close to home for me here in the UK, Tevra plans to launch a stablecoin tied to the British pound. Tevra is releasing a crypto token tied to the value of the British pound as part of the push into new stablecoins. The GBPT token will be available to trade on the Ethereum blockchain from early July, according to a statement on Wednesday. The crypto platform also offers tokens pegged to the US dollar, the euro, the Chinese yuan, and the Mexican peso, having launched the latter last month. Stablecoins are one of the most used tokens in crypto and have been adopted by traders and investors as a store of wealth to safeguard portfolios against market volatility. Tevra has been harder hit by crypto rout than other rivals, such as Circle's USDC, and its dollar token briefly lost its peg last month. Total USDT circulation has dropped to $67 billion, according to data from CoinGecko, compared with a peak of more than $83 billion in early May. The new pound token comes as central banks in Europe and the UK push ahead with CBDCs, a state-issued version of a stablecoin. The Bank of England remains in discussions with market participants about whether to launch a digital sterling. But the Bank of England has said that the token won't arrive until the second half of this decade, if approved. So, we're talking, 5, 7, maybe even more years than that away. But have a look at that if that would interest you. Interesting moves, I think. So that's pretty much it with the news bites. But I have got some videos I think you should watch as well. I like to include videos. Great information sources on YouTube nowadays. You must get into that if you're looking into crypto in any way. And my first one here is one of my favorite ones on here, which I'm subscribed to, called Coin Bureau. And they have a great one here on their weekly crypto news review. So they, a bit like our crypto news bites here. And it's the market meltdown, talking about free AC, Celsius, job cuts, and a lot more in that one. So have a look at that one. That's definitely worth a watch. Another channel I found recently, which I think you should have a look at. It's not a video per se, but I like all of the videos. I've watched several of them so far. So I'm showing you this one. It's called Crypto Casey. And she has all these great ones like why you should HODL, talking about interest rates. So it's real learning information here on the videos. I like these. These are great, especially for people who are new to this as well. So have a look at that. She's got a great store of videos there showing you how to get into some of this stuff. And my third news source here is actually from Bloomberg at the moment. Bloomberg Crypto. It was out 21st of June, so a day owed, and this is talking about all different kinds of things as well. So give that one. Talking about what they think is going to happen in the very close future for crypto, Bitcoin, and everything else. Again, there are hundreds more great news sources on YouTube. So if you're not using that, please use that as a news information source. And also, I'll put the link in the top of the text that comes with the description of this video for my News Bites magazine. We're approaching 5,000 articles in there now. And I try to add all the latest news I can find on crypto every single day to that, so give that a read. Anyway, have a great week ahead. Keep your head up, keep your chin up, keep hodling. Thanks for your support out there, guys. Send us any questions, any comments, put them down below, or put them in our our private groups and forums. Thanks again for all your help. Have a great week ahead. Take care.